Good morning or good afternoon to whoever is listening. Thank you for joining in today. My name is Carly Rowden and I am a business development associate with Normac, Canada's largest specialized insurance appraisal firm. Today we'll be discussing the Ontario insurance gap, what drives valuation increases, and how corporations can plan ahead. I want to start with what an insurance appraisal actually is. An insurance appraisal estimates the total cost to rebuild a property from the ground up today using current materials, labor, and building standards. That value is then used by insurance brokers to help establish the corporation's insurance policy limit. Importantly, this has very little correlation to market value or what units in the building might sell for on the resale market. One big question that we're hearing is if condo prices are softening, why are replacement costs still increasing? And the answer is that market value and replacement cost have very little correlation. Market value is driven by buyer demand and interest rates, while replacement cost is the current cost to rebuild a property today, driven mainly by construction labor and material costs, as well as current building code requirements. Even if condo prices decline, reconstruction costs can still rise. And what that creates is something that we call the insurance gap, the difference between what a property is insured for and what it would actually cost to rebuild. While much of southern Ontario has seen prices decline over the last few years, there is confusion asking why the values on replacement costs don't follow a similar pattern. Understanding that distinction is critical because it directly affects whether a condominium corporation is adequately insured in the event of a total loss. Today I'm going to walk through why that gap happens, why you may be seeing it here in Ontario, and more importantly, how condo corporations can avoid those larger, frustrating valuation increases over time. Across Canada, replacement cost values have increased significantly over the past decade, outpacing general inflation, with much of the heightened inflation pushing up materials and labor right after the pandemic. While general inflation has risen considerably, construction costs for multi-residential buildings, particularly in the Greater Toronto Area, have escalated at an even faster pace. For example, general CPI inflation has increased by approximately 30% over the past decade. In contrast, construction costs for multi-residential buildings in the GTA has risen significantly faster, increasing by approximately 83% over the same time period. Several factors continue to drive this trend. One, construction costs are outpacing general inflation. General inflation is only one piece of the puzzle. Construction inflation operates within its own ecosystem and has consistently outpaced broader economic inflation over time. Reconstruction costs are influenced by factors such as material pricing volatility, transportation and fuel costs, supply chain disruption, and labor shortages. Even as some short-term market spikes have stabilized, reconstruction costs remain elevated compared to historical norms. For condominium corporations, this means replacement cost valuations can continue to rise even during periods when condo market prices may be declining, creating a growing gap between insured values and actual rebuild exposure if valuations are not updated regularly. Secondly, rebuilding in the GTA is increasingly complex. Urban centers like Toronto continue to face complex rebuilding conditions that can increase reconstruction costs. This includes limited site access, traffic management, restricted staging areas, permitting challenges, and higher demand for specialized trades. And third, building code changes add additional costs. Another important consideration is evolving building code requirements. When a property is rebuilt following a major loss, reconstruction must comply with current building standards, not necessarily the standards that existed when the building was originally constructed. Over time, changes to fire protection safe systems, accessibility requirements, energy efficiency standards, environmental regulations, and life safety provisions can add significant cost to a rebuild. As a result, even if the building itself has not changed substantially, the cost to reconstruct it to today's standards often has. One of the most important responsibilities of a condominium corporation is ensuring their insurance coverage reasonably reflects reconstruction values. The goal of an insurance appraisal is not simply to track rising costs, it is to support informed decision making and helps boards fulfill their fiduciary duty to protect the corporation and its owners from unnecessary financial exposure. Section 99 of the Ontario Condo Act states that the corporation shall obtain and maintain insurance on its own behalf and on behalf of the owners for damage to the unit and common elements that is caused by major perils or the other perils, and that the insurance required under this section shall cover the replacement cost of the property. The condo's declaration should also have a clause in the insurance section which states that either the condo should obtain an appraisal every 3 years or on an annual basis before renewing its insurance policy. A common challenge occurs when reconstruction costs increase gradually over several years without corresponding valuation updates. A common pattern that we see is that an insurance appraisal is obtained, then nothing happens for 3, 5, or even more years. Then a new appraisal is done. When the new appraisal is completed, the resulting adjustment can appear sudden or alarming, when in reality it reflects accumulated cost escalation that has not yet been captured. Regular appraisals and ongoing valuation and monitoring help corporations maintain insurance limits that are more aligned with current reconstruction realities. This proactive approach supports stronger risk management, greater confidence in coverage adequacy, and helps reduce the likelihood of significant valuation corrections over time. So, moving on. The good news is that the large correction increases are often avoidable through proactive valuation management. When appraisals and valuation updates are completed regularly, increases tend to be smaller, more predictable, and easier to budget for and communicate to owners. Regular updates also help ensure that insurance values reflect current reconstruction costs rather than outdated pricing from years prior. Structured approaches like 3-year appraisal cycles with annual updates can help condominium corporations avoid significant catch-up adjustments over time. Consistency really is the key here. One of the biggest operational challenges many corporations still face is simply timing. Appraisals are delayed, renewal dates creep up unexpectedly, or properties are missed simply because everyone is very busy. So the most important or most successful valuation strategies tend to involve strong coordination between property managers, boards, brokers, and appraisal consultants. Simple organizational practices can make significant differences, and these include things like diarizing appraisal schedules well in advance, aligning valuation reviews with insurance renewal dates, keeping property lists and records organized ahead of time, and planning updates proactively rather than reactively. These steps help reduce rushed renewals, avoid missed updates, and support more stable long-term valuation management. So, looking ahead, and the bottom line is that reconstruction costs will always change. This is not unique to Ontario, nor is it something that condominium corporations can control. What corporations can control is how consistently those changes are monitored and captured over time. When valuations are managed proactively, large and frustrating jumps become more manageable. More importantly, corporations gain greater confidence that they're adequately protected if a catastrophic loss were to occur. At the end of the day, accurate replacement cost valuations are about far more than numbers on a report. They're about protecting communities, safeguarding owners, and helping condominium boards fulfill their responsibility to the people that they represent. That is the end of my presentation today. Just to wrap up, as mentioned, Normac is Canada's largest specialized insurance appraisal firm. We're recognized as a top referral for leading insurance brokerages and pride ourselves on delivering precise, high quality reports with a strong focus on customer service. If you're looking for a quote or want to further connect to discuss any insurance appraisal related questions or needs, please feel free to reach out. My email and my phone number are on the screen here, and I am available at any point in time. Thanks for being here today and listening, and hope you enjoy the rest of your day.